Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Um, the May's monthly bar settled only 2.5 handles from the low after making an all-time high at the beginning of the month, suggesting that the downside is not done, and with April's low less than 20, well, around 20 handles away. For a fourth week in a row, on a weekly basis, we're one time framing lower with an acceleration towards the end of the month after the 2800 area was taken. That also is aligned with the monthly, and we're seeing an immediate auction down. The daily chart, which is the one that we have here, provides additional detail to the break that we mentioned above. And the interesting thing here is that we see three gaps that have been left on the way down. This suggests that the move in may have been gone too far too fast, and this increased dramatically the risk for the short side. Zooming into the market profile, we see that the market broke below the overnight low immediately after the open and then found no follow through. This probably was a consequence of the overnight inventory being excessively short. Remember that overnight session dropped around 40 handles. So the market was probably a bit too short, and that's why it didn't find any continuation. Then immediately it rallied. However, after we saw that, the market show a lot of underlying weakness, and this was evident because of the failure to test the prominent overnight point of control and obviously failure to close the gap. Now, there are two important data points on the market profile. Number one, the market is being driven and continues being driven by short-term money, judging by the amount of poor and weak highs and lows that we see day in, day out. And second, the tremendous spike in volume heading into the close. You don't see that here, but I can quickly show my volume profile. Sorry. The tremendous amount of volume that we saw here, but at the same time, it didn't manage to get any continuation from the early morning low. That suggests that the market can be very short at the moment. This is aligned with the three gaps mentioned on the daily chart. So we need to keep an eye on the risk on the short side. So the immediate focus is on value development relative to Fridays, with good odds for continuation. Now acceptance above halfback will denote change and suggest some type of short-term balance. But remember, the risk is very high given the extent of the move we've seen recently. So I would say that patience is king. For the time being, it's better to wait for the market to settle a little bit and have a clear direction. As we always say, anything can happen because odds are just odds. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Any opinions, news, research, analysis, prices, or other information offered by Grasping the Market is provided as general market commentary and does not constitute or replace investment advice. Grasping the Market accepts no liability for any loss or damage, including without limitation to any loss of profit which may arise directly or indirectly from the use or reliance on such information.